Dear learners, this is Shashi Ramachandran. This is in continuation of my previous video, that is concept of accounting. We are going to learn in this video advantages of accounting and limitations of accounting. So let's proceed. See, accounting, you learned that accounting records in a systematic manner. So it's a first advantage of accounting is that it financial information about the business. That means here that during the accounting period, the profit earned or a loss suffered by the business or the financial position of the business, that is again given by accounting. So accounting, since it records in a systematic manner, so it gives a record of it gives the picture of profit and loss and a financial position. So this is one of the advantage of accounting, and also it assists to management. Assistance to management here means it helps actually in taking a managerial decision. Accounting provides operating and overall profitability position and a financial performance of the business, which is of course needed by the management for taking a managerial decision, and these decisions are helpful for planning and controlling of the business. So accounting helps the management to take important decision. Okay, moving to the next advantage, that is it replaces the memory. Replacing memory here means we learned in that story that human mind, human memory is again, there is a limitation, can't remember all the transaction what happened in the business. So a systematic and timely recording of transaction helps to remember the transactions occurred in the business. So accounting record actually provides the necessary information, so no need to remember all those things. It is all recorded and given in the books of account. Also accounting facilitates the comparative study. Now comparative study means here when you have to compare the results of the accounting information or the accounting data with the previous year. Since you have all the data, so you can easily compare your current year data with the previous year to know the difference and to work accordingly, or you can say to plan for the future. You need to know the difference, you need to compare the two years data. Okay, and it's not only that, but you can also, like business can also compare with their competitors data, financial information. So it helps, accounting actually helps to compare the like to make a comparative study, you can say, and 1 year result are compared with the another year results. Okay, now it also facilitates settlement of tax liabilities. So here we can say that a systematic accounting record, a systematic accounting record helps in settlement of income tax and different taxes. Now to all the taxes are abolished and there is a goods and service tax. So goods and service tax or a income tax, this type of liabilities of a business can be easily like settled with the help of accounting. So it is a good evidence, it's a good evidence of the correctness of the transactions, because the transactions are recorded in a systematic manner, all are supported by the proof or the evidence or a supported document. So it actually helps to get this, that these are all, these are authentic and correct. Okay, and also accounting helps to facilitate loan here means when a firm or a company seek a loan from the government or from the bank. Now what exactly bank needs, they grant loan, the banks or the financial institutions, they grant loan on the basis of the growth potential which is supported by the performance. So they need to know whether in future the firm, how firm will grow, what are their future project, and how what returns they are going to get, whether the returns are going to increase. So based on that only they provide their loan, they provide loan, that means based on the performance, and the performance of course is from accounting. Okay? Because they are keeping a systematic record will help them to facilitate loan. And systematic record of course is also the evidence in the court, Okay, evidence in the court here means the claim against the firm by the lenders or the creditor or a supplier or any bank or something can be easily settled in the court by showing the accounts as a evidence in the support of their argument. Okay, next is a facilitates sale of business. Now the sale of business here means like when the if in case the firm wants to sell their business, then accounting basically helps in evaluating the worth of the business, the value of the business at the time of its sale. So, selling price of the business and the goodwill, the reputation of the business or the firm can be easily determined with the help of the accounting data, accounting, which actually is keeping a proper record. Okay, and also accounting assist in the event of insolvency. Now, insolvency is a case when the firm's dues are more than firm's property. Okay, we can say in other word, in a technical word, we can say the liabilities are more than assets. Okay, but you still have to understand these terms. So with the liabilities or the you can say the dues are more than the properties, which so dues are not the firm is not able to cover up their dues. So in that case, again, to see the past results, what actually happened in past. Okay, so why insolvency? Basically, insolvency involves explaining many transactions that have taken place in the past. So, systematic accounting records assist a great deal in such situation. So, these because since the accounting records are kept in a systematic way, so it helps to us to check out that what went wrong in past. Okay, so these are the advantages of accounting. You can add many more, that it helps to detect the errors and the fraud, because we can anytime we can go back and check the accounts to see what went wrong. So errors and the frauds can be checked easily. Also we can say this provides the information of financial statement of financial position, and it is a complete record, systematic record. Okay, now, limitations of accounting. The first one says accounting is not fully exact. Okay, now accounting is not exact in spite of the fact that most transactions are recorded on the basis of evidence. Yet some estimates are also made. So here we can say that accounting is based on the supporting documents. Accounting, whenever we record something, it should be supported by a support document or a source document, bill or receipt or something like that. But some estimates are also made. Let's see, say the machinery is bought in a business worth rupees 1 lakh. Okay, and this is in the year 2016. Now in the year 2016, the machinery bought is worth rupees 1 lakh. Suppose I say in the year 2019, here, if since we cannot see this machinery has been used, but we can't see that usage of that machinery. So we, and also this is also the fact that we cannot show it as rupees 1 lakh in this year. After 3 years, we can't show it as rupee 1 lakh. So there is a reduction in the machinery during these 3 years, which we estimate. Okay, which we estimate that every year some part of the machinery is being depreciated. Actually the word is depreciation. So depreciation here means the reduction in the value of asset or reduction in the value of any property of the business. So we keep on reducing. Say if I say 5% reduction, we are estimating that every year 5% of the value is decreasing, so that the value of machinery keep decreasing in our books, and we can get a correct worth of the machinery. So accounting is based on the uh, like estimation also. So therefore it can be said that accounting is not fully exact. Okay, then next limitation says that accounting is unrealistic in gives a unrealistic information. Now why it is unrealistic? Because as I explained, the accounting is also based on the concept principle. It is man made, it's not created by god. So it's like we have created it. So with some principle, with some assumption, with some like concept we are using, the rules we are using, so it becomes unrealistic. It may not be realistic since accounting statements are prepared following the accounting concept and the conventions. Okay, like again we can say the assets which are recorded at a cost, then depreciation is taken out. So here the value, we are changing the value accordingly, like we are changing the value as per the estimation, so it is not real. Now not real means based on the principles. Okay, now coming to the next one, accounting ignores the qualitative elements. So this is like the first thing we read this only, every time accounting records quantitative term, it identify the transaction, financial transaction of a like of financial nature, or we can say which can be expressed in terms of money, and also measure in terms of one particular unit, that is rupee. So accounting is confined to monetary matters only. Therefore the qualitative elements like quality or a skill of a management and a staff, or hard work of a employee, or you can say dispute of one department with other department, of course it has a adverse effect, but it is not recorded. The qualitative element which can be uh, can't be expressed in terms of quantity or money, are not expressed or are not recorded here as a in accounting, though it affect the business. So that's one of the limitation. And moving to the next, it ignores the effect of price level change. Now what is this price level? Accounting is recorded on that particular date. As I have taken the example of that, it records the machinery at 1 lakh. Okay, maybe in markets second year the value of machinery has gone down to 50,000 only because of the new invention, new technology, some new way of technology being introduced, so it becomes obsolete, and his its value decreased in the market. So the market price are not shown in the books, it's only the price at what it is bought, that is cost, is recorded here. And every time we are charging depreciation and reducing the value, so it is not taken as what is the market price of that particular thing. So the price level change, the raw material what we bought, maybe that the stock what we have, the price is changed outside, maybe it increased or decreased, but we record it at the price at which we bought, so it won't record the effect of the price level change. Now coming to the next one, suffers from window dressing. So you all know about window shopping. So window shopping, when you go for window shopping, you like the dress outside, but when you go in and you ask for some other color of that, the same pattern I need, but I need a different color. Okay, but the shopkeeper says, sorry, ma'am, that is the only one we have. Okay, fine, get me this particular size. Sorry, ma'am, we don't have that size, we have only one. So anything you want to try for? So window dressing is something showing it outside. From outside, you're showing it a good picture of the firm. Okay. So financial statement, as you all know, financial statement is something which is for the users. Okay, that is analysis. The analyze in such a manner that user can take a decision. So that is again one of the limitation, that personal bias is there, that they can manipulate the accounting information in such a way that it shows a best picture outside the to the outsiders. Okay, so it lacks to show the true and fair profit of the business. Why? Just you want to attract the investors. So the management of business entity, they may present financial statement to suit their own requirements by showing more or less profit than the true and fair profit. So this can be done through window dressing. So by showing more or less profit than the true profit, this is done by over like undervaluation of stock, or treating the expenditure in a different way. So all there are many ways, we'll discuss in later chapter. Window dressing, I hope you got it. There's something which is shown outside, it is shown as if the it the firm is well doing well, and a investor can take a decision to invest, but inside story is something different. Okay, so this is also one of the limitation of accounting. Hope you like this video. Share this video with your friends and do subscribe to my channel Exuberant Learners. Also click on the bell icon to get the latest video updates on my channel. Thank you.